Assalamualaikum and hello to all viewers out there. Today I'm going to discuss an application example for error under the standard MFRS 108, which is equivalent to IAS 8, dealing with accounting policies, changes in accounting estimates and error. And I'm using this example which comes from the final exam question December 2018. From FAR270. Yeah, it's question 3, and I'm focusing on question 3B. Let's start. This is what you have. You have the information on 1st of July 2018. A company, Permata Berhad, bought 4 units of shop houses, and that amounts to 4 million. So meaning that this 4 million is your initial cost, or your cost as at 1st of July, cost on this date. The company depreciated the building, nothing wrong with it, 5% per annum. So it was being depreciated, the rate is 5% per annum, and on a yearly basis on cost. So straight line method, because on cost, and it was adopting yearly basis. So under yearly basis, there is no depreciation in the year of disposal, but there will be full year charge of depreciation in the year acquired. Then that was what happened on 1st of July. So under 1st of July 2000, July 2016. That is what happened. And you have more information later. During the financial year ended 30th June 2017, the company carried out some extension. So there was this extension to the building, and the extension cost you 500,000. So if you talk about extension to the buildings, by right the building should have been debited with 500,000. So meaning that the extension cost should have been added to the cost of the building. However, the amount was treated, that amount, which is this 500,000 amount, was treated as a revenue expenditure. So it was wrongly recognized. Why wrongly recognized? Extension costs should be capitalized because it improves future economic benefits. However, this company go and treat it as revenue expenditure. So it becomes a revenue expenditure which is being expensed off to the SOPL. When? In this prior period or prior year. So what happened in the prior year is that you have 500,000 was which is extension cost of PPE is wrongly treated as an expense, and this is not what happening in the current year. The matter, however, the problem of having this being wrongly recognized, or the so-called what happened in this prior period where it was being wrongly treated as expense, the 500,000 extension costs, it was only discovered in the current year, which is on 1st of June 2018. So it happens that you discover it here. You discover it on 1st of June. This is 1st of June 18. So you discovered the error in prior year in the current year. You discovered error in prior year or prior period error in the current year. And on the date that you discovered, it was 1st of June 18. So the year end is 30th of June 18. So this one is your current period. So meaning that error in the prior period were discovered in the current period. On top of that, you are also given some important information, which is the information regarding the retained earnings. And what we're given is that, right, you should look at the last sentence in the question. You are informed that the retained earning as on 1st of July, which is here, is 1.5 million. The retained earnings brought forward, which is the component of equity of the company. Okay, that is what happened to the company. And because of this, not that you notice that the revenue expenditure was wrongly being recognized, right? But there is also an issue of depreciation being undercharged. So let's look at what is required. Right? The first part of the question, if you look, I'm trying to show you what happened. The first part. Okay. Identify and explain the element in the above scenario. If it, within the context of MFRS 108, when we talk about element, it can either be changes in accounting policy, changes in accounting estimate, and the last one is the error, where error normally either the error in the prior year PY or error that you committed in the current year and you discovered that in the same year. So the material error is normally the material prior period error, right? So let's see what we have here. In our case just now, we discover that the extension of the building was wrongly charged as an expense in the current year, and that mistake or that oversight or misstatement has been actually being done in the prior period. So when you are asked to explain the element, you need to know that the element is a prior year error or prior period error. So therefore, what is the error? So the error here is that the error made in the prior year is the one ending 30th of June 2017 was discovered. So it was discovered and the evidence were there, so you cannot just simply, let your financial statement to have that particular error. So you need to go and rectify the error, and that was discovered at the end of the current year. So error in the prior year discovered in the current year. When you ask to there is the part on to identify. But the next part, you need to go and check if you are asked to not just identify, but you normally are asked to explain. So you need to be able to explain what are the error. So the error is that in the an amount of depreciation, not only that it was wrongly recognized, amount of depreciation was also being undercharged. Okay, what is actually the error if I were to show you here? The error is that you go and debit this to the shopper, and that because you treat the extension cost of 500,000 to be an expense, and you credit bank. And this is wrong, because when you do this, you have the correct entry is the correct entry. This is the error. The correct entry. I'm not talking about correction. The correct entry is that there shouldn't be any entry regarding this, but by right the entry should be for you to debit to your building. So you need to go and add more to the building and credit bank. This is the correct entry, 300,000. However, this cannot be done. What you need to do is you need to go and remove these expenses, right? Last year, prior year expenses, and you need to go and add up to your building extra 300. Okay, that is what happened. Because of that, your building has been depreciated, and in that particular year, the depreciation expense has also been undercharged, right, in the SOPL. So your depreciation expense has been undercharged because it has not been provided enough because of that 500,000. Yeah, sorry, it's 500,000. Okay, 500,000. Therefore, because of that, it has been undercharged in the SOPL. Why? Because the extension cost was wrongly charged as revenue expenditure. As a result, depreciation expense were also being undercharged. So that must be explained. So you want to know how much is the depreciation that has been undercharged, because for error which happened in the prior period, it must be adjusted retrospectively, but you need to first identify the error. So you charge your depreciation, but your depreciation was being undercharged. By how much? By 200,000. Yeah, it was being undercharged in the SOPL for the year ended 30th June 2017. And the extension cost was also wrongly charged as an expense. So that is the two things that happened, stating it. What are the error? The depreciation that was undercharged, and also the error that the extension cost that was also being wrongly or overcharged. So it was being overcharged, right? So that is the first part of that question, part 1. Now we go to the part 2. In part 2, if you have already identified the error, what are the corrections? So earlier I've shown you what are the error, what were the correct entry, and now how do we correct the error? Right? If you can still recall, we have already wrongly debited our expenses in the prior period. Because of that, our expenses on depreciation was also undercharged. So you need to correct the error. What you can do is you need to go and debit to the right account. So you will debit building, because you earlier have already debited the extension cost. But you cannot go and credit the extension cost to remove the extension cost from the list of expenses, because extension costs, yeah, at that time has already been closed off to the SOPL in 2017, 30th of June. So what you need to understand is the expenses at the end will be deducted to arrive at the profit for the year, and at the end that will be in the retained profit, yeah, in the statement of changes in equity. So that retained profit that contains the expenses is the one that you need to go and restate or adjust. Earlier you have already debited the expenses. So when you debited the expenses, you actually reduce the profit, right? So now you need to go and restate the profit, because the expenses shouldn't be there in the first place. So you will debit the retained profit brought forward, which is actually your equity component, yeah. By how much? By 500,000. Doing this, you are actually doing the correction by capitalizing the extension cost, and now you recognize that as part of the building. That was the first thing that you need to do. The second one is about the depreciation that has been undercharged. So the depreciation that has been undercharged is actually it was 500,000, right? 500,000. The 500,000, if you go on up there, you can see that the percentage is 5%, right? The percentage of the depreciation is 5%. So therefore, what you will do is to get this 25, this is 500,000 times 5% times 1 year, yeah, because yearly basis. So that one, the one that was undercharged, so this, you have 25,000 depreciation. The one that is being undercharged in the prior year, which is prior year ending 30th June 17, must now be charged as an expense. So the one that is in prior year and also the one in current year must also be provided correctly, which is in 2018. So therefore, the one in the prior year, if you calculate it with 25,000, the one in prior year, because it is an expenses, it will be charged to the retained profit brought forward. The one in the current year will be charged in the statement of profit or loss under the admin expenses. So because you do that, you will debit retained profit 25,000. This one is for the prior year. You will also debit your depreciation in the SOPL, another 25,000, that is for current year, and the total that you will credit to your accumulated depreciation will be a total of 50,000, and that now has restate the additional accumulated depreciation, right? So you provide additional accumulated depreciation in the prior period, and therefore it continues in the current year, and you increase your depreciation. So that one is the correction. Next is to discuss the accounting treatment. So not only that you can do the correction, but also you need to be able to discuss what or explain what you have earlier corrected. So you are asked to discuss the accounting treatment. So if you are asked to discuss or explain the accounting treatment or describe the accounting treatment, number one that you must do is to state the element, right? To state the element. This is the important item. Our important element here is, this is not a change in accounting estimate, this is not a change in accounting policy, but this is a prior period error. So state that. Then mention about what are the adjustments that we need to do. So for prior period error, our adjustment should be a retrospective adjustment. So retrospective adjustment means you need to go and adjust to the earliest possible period and assume as if to go and correct the prior period. Go and adjust it by how? By adjusting the opening balance of the equity. And our point here, the equity is our retained earnings. So the opening balance must be restated. Here, it is being restated by increasing it by 500,000. So there should be one more zero here. 500,000. 500,000. Right? And the building so I put another zero here, 500,000. And the building account is capitalized. So you increase by 500,000 and the building is also now being capitalized, with the extension cost of 500,000. So go and adjust the opening balance, meaning that whatever that you have already done in your journal, explain them in sentences. So what you debit is what you increase the depreciation, right? At the same time, you also have added more to the building, and that is what you meant by capitalize, right? So that was the first part. Then talk about what happened about the depreciation. So you go and increase the depreciation. How? Which is the journal entry, the second journal entry that you have done earlier. Increase the accumulated depreciation by reducing the retained earnings. Remember what we did just now was to debit retained profit brought forward or retained earnings. So when you do this, you increase the depreciation. At the same time, you also need to adjust what happened in the current year. This one is in the prior year. That's one in the current year. Increase the current year depreciation. How? By go and adding more to the expenses and crediting it to the accumulated depreciation by another 25,000. 25,000. Okay. This is the figure that you adjust, the figure that you adjust. And this is what you adjusted, you increase. This is also what you adjusted, right? You increase also the accumulated depreciation. You so increase the building with the extension cost. Okay, now we go to the next one. The next one is I'm going to show you the effect of the correction of errors in the financial statement. So when you have done the correct recognition, you have already do the correct measurement, you also need to show the correct presentation. So what we will do is we're going to look at what are the effect in the various financial statement. So the first one is the effect in the statement of profit or loss and other comprehensive income. So depreciation was earlier being debited. If you can still recall, we do this. Debit depreciation 25,000 in the current year. We also do this. Debit retained earnings brought forward for our prior year, with the 25,000. And we do this too, the credit accumulated depreciation. If you cannot recall, I'm writing for you. So with that, you show that 25,000 here in the building, right? So that was the effect for the expenses. So this 25,000 that you have in the prior period won't be shown in the SOPL because SOPL just record for the current year. Now we move on to our extract statement of changes in equity. So if you look at the statement of changes in equity, one of the item that were given directly in the question is the retained profit brought forward on this beginning of the prior period, 1.5. So you need to go and incorporate the prior year adjustment. So prior adjustment normally change in counting policy, and normally prior year error. Those are normally adjusted in the prior adjustment. So in our case, it's just this prior year error. So you need to go and add up the building cost that is being capitalized. So when you add up, yeah, that building cost, you have already done that in the last year's financial statement, right? Because of that, it will have increased the retained profit. Why increase? You go and debit building by 500. If you can still recall, you credit retained profit brought forward by 500. So when you credit retained profit brought forward, you add here. And the second entry is the one that I have shown you earlier about the depreciation under provided, yeah, due to the wrongly charged extension cost. So that was 25. So why you go and deduct? Because earlier you do this debit retained profit brought forward 25, and you credit your accumulated depreciation also 25,000. So at the end, the balance that you have there is the restated balance. The balance here, meaning that the balance has been adjusted, and this is the balance that you will carry forward later, before at the end of, not at the end but beginning of 1st of July. Brought forward, actually, that is the one that you brought forward. Next is to look at the effect in the statement of financial position. So if you look at the statement of financial position, the effect here is affecting the PPE item. So this is just the extract statement. Of course, it will affect movement. It will affect movement of PPE, meaning that it will affect the notes to the financial statement. But in this question, we are not showing the effect of notes, so I'm just showing the effect of that in the PPE. So if it's in the notes, you need to go and add this 500,000 extension cost to the cost 4 million. So now this is the corrected version of your building, 4.5. Your depreciation that has not been provided must be provided. So before that, your depreciation was just based on 4 million, yeah, and now you need to go and add the extra 50,000, which is 50,000 here is 25,000 depreciation in the prior period, 25,000 depreciation in the current period. So that gives you 450. Before that, it was 400,000, right, for the depreciation, but now becomes 450, an increase of 50,000. And therefore your restated carrying amount of the PPE is 4050. So your PPE has been restated, your equity balance brought forward also has been restated, and now the error has been rectified. So if there are evidence that there are errors, make correction. Don't leave the error as it is. So thank you for watching. I hope to see you again in my channel. Till then, I'll see you when I will see you. Assalamualaikum warahmatullah.